Almost every week now, we're seeing more and more new humanoid bot companies popping out all over the world. The market is exploding. But might the path for humanoid companies mirror that with the electric vehicle market? Here too, we saw an explosion of new startups, but now we've seen almost all of them either go bankrupt or on their way to oblivion, as only a couple companies, Tesla and BYD, have shown the ability to create a compelling EV profitably. So what can we expect with the humanoid startup companies? Let's have fun and explore this together. So joining me today, we've got Hans Nelson. He's got his own YouTube channel called Hans C. Nelson. We've got Cern Basher. He's a financial advisor. He's joined me several times. He's done a lot of deep dives in humanoid bots, business models. And we've got AJ. He's been following Tesla quite closely. He's been providing a lot of data about it. And it was his post about his belief of what might happen to these humanoid bot companies and startups that we wanted to just explore and think this through and find out what we might see happening with this explosion of startups. Welcome, everybody.
It's good to be here. Thank you.
Hello, thanks for having me.
So let's start with you, AJ. You had a post that I want to share here. You said all EV startup IPOs, except Tesla's, were complete disasters for long-term investors, and we're about to repeat the same in emerging robotic space. I think there's no debate that these EV startup IPOs, you're absolutely correct. There's been many of them that are struggling today, not doing as well as they thought. There will be some winners, but not as many as they assumed that they would. Then you say some investors are about to step into the robotics trap as they did into the EV trap. All EV startups except Tesla have been a complete disaster for type 3 investors. So you'll explain to us what you mean by type 1, type 2, and type 3. Many still don't realize, but Tesla's a trapper in this situation. Do you want to explain this?
Yeah, happy to. So basically, maybe we should start off with the sort of the EV space, or I often call this situation the EV bubble. And if we go back, I mean, Tesla started before 2010 selling the Roadster, which is, from my perspective, more a proof of concept. Only a few thousand units were produced, but it was enough to prove to investors to give Tesla enough money to basically take the next stage, which was then the Model S, as you guys obviously know, and then the rest is obviously history. And then Tesla's remarkable market cap explosion then basically I think was the incubator behind many or most of these other EV startups that came later. And I think described this in another post before, but the way I think about it is people see Tesla at value 100, they see startup at value 1, and they say, okay, if the little startup can only do a tenth of the performance of Tesla, then I can do 10x. Tesla today is already at 100. To get to 1,000, to get a 10x from Tesla, I'm too late. That's the fundamental flaw in I think the reasoning of many of these investors. So what they do is they think, okay, I'm happy with 1/10 of Tesla's performance, and I still 10x. I invest in these startups. It's basically what it comes down to. If you really boil it down to the core, in my opinion. And when you look at how all these startup IPOs, and a lot of them were through SPAC, which we can get into later, but anyways, they were completely overhyped, and you can see for a long time all these IPOs, they exploded. These companies gained over a very short period of time huge amount of value, even though a lot of them never had at that point delivered a single EV. Let's just keep this in mind. And so you basically bought largely a blank check company. And as you would expect, as the EV bubble sort of started bursting, as people found out, oh, it's not that easy to actually make EVs profitably. And actually, we should actually differentiate two things, because this is something a lot of people get wrong. People see a good EV. It has a lot of features, a lot of power, good range, looks good, etc. Everything it's a good car. Take the Rivian. Rivian is the best example. The Rivian is a good car, but a good car is not enough. It's insufficient. A good car from a business perspective, you only get if you have the former. If it's a good car, plus you can make it at a reasonable cost. And this is where all these EV startups fail. They actually give you pretty good cars, but they can't make them at an affordable price, or I should say at a cost level where they can make an acceptable margin, and hence they fail. And the only company that managed to figure this equation out is Tesla. They managed to lower the cost so much and still and offer affordable price to sell high units to make a good profit on his vehicles. But Tesla is really the outlier here, and this is not just hyperbole or opinion. You just need to look at the numbers, and it's quite obvious. I pause here.
Yeah, I would 100% agree with all of those points. And, with the exception of a couple of those companies, a lot of the EV startups that came to market were actually brought by SPAC. And obviously, the level of the health of a company, that is brought into the public market and made available to a retail investor by SPAC is going to be a lot lower quality than one that is brought by IPO. But the point still stands because I believe even Rivian, they came to market via the traditional IPO vehicle, and they are still one of those companies that is in that very difficult position of making great products, but still not on a runway that looks like it has any ability to actually produce vehicles that are lower cost than um, than they sell them for. But we are seeing companies out of China that seems like they're able to at least operate their companies at close to break even, that are on a pathway to produce profitable EVs. And so, I mean, there are other examples besides just the Western automakers to take into account here in this analogy.
Could I just add on Rivian? I think part of the reason why Rivian did so well, not only in terms of fundraising, but also the IPO success, it skyrocketed, had amazing valuation for some time, was one, the Amazon deal, 100,000 delivery vans out of the gate. That was a big sort of, let's say, a very high floor for that company. I think also Ford, if I'm not mistaken, was in the boat. So it had very big name investors, and that gave perhaps too much confidence, and which then led to the disaster that we saw for the long-term holders, which I described as type 3 investors.
Okay, well, let's get right to the comparing it to the robotic startups.
Well,
Tell us
can
more
we
about your
break
thinking.
out the different types of investors for the audience first?
Yeah, happy to do so. So basically, in my post, and of course, as usual, you have to simplify because the financial market consists of who knows how many different types of investors. But I basically try to sort of make it high level, how you like a simplified model, how you can think about it. And I basically think about it as the early investor who comes in pre-IPO. Very important, because these guys come in at much lower valuations than the at the price the IPO itself is priced later. So it's a huge distinction. And then the second type of investor is the one who then trades around the sentiment. They look at the market window. Is it a good market window for equities? They do all the basics. They check for there's a long list of details you can go through, like what macroeconomic data is coming out, blah, 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 who's reporting at the time, all this stuff the ECM bankers will tell you about if you do an IPO. I was investment banker. I was never ECM banker, but I was off with my colleagues pitching those deals because I was in the M&A team and coverage. So I held the client relationship, but when my client wanted to IPO a company, I would bring my ECM colleagues. So I heard the pitch, that they talk about this stuff. And bottom line is, there's a certain class of investors, hedge funds, etc. They assess the sentiments. They give a flying fridge about what this company does, whether they have any chance of succeeding. All they do is they analyze the sentiment of the market, the general market around the company, and this is how they invest in it. It's all about trading stock and what the company does, whether they sell pretzels, flying cars, or whatever. it's not any of their concern. And so the second type, and then there's the third type. This is like where I would probably include most of the retail, but also many professional investors, and also even a lot of the passive large ETFs that then basically, depending on what index a certain company is inserted into, will also automatically buy into this company post IPO, because you also have to keep in mind only a tiny minority of certain class of investors can actually invest in a pre-IPO company. And at IPO, you also need to be amongst a select group of companies to actually get an allocation, unless you're in the times of the dot-com bubble, where even retail investors got frequently large allocations, but it's a different topic from a long time ago. But bottom line is, so you have these three groups, and they come in all at sort of different valuations. The pre-IPO, much lower than the IPO investor. Then at IPO, the guys who got the allocation get the listing price, and then the stock starts trading. And when you have a big bubble, then the stock goes up very quickly. So you actually don't get in at the opening price. So you get in much higher, which all eats away from your returns and makes the investment much, much more risky than it is to any of the other two types of investors. But I personally care really only about the last type, the type 3 investor, which all the retail falls into. And that's why I post the stuff I post about, to tell people, look, guys, if you want to play this game, it's actually high risk gamble. And if there are big names in the pre-IPO stage, like Nvidia, Amazon, Apple, whatever, it doesn't matter, because these guys are almost guaranteed to get at least their money back. Stop.
Okay. I think what we need to do is break it down into two main points, right? So the first point you're saying is that you just compared the EV startup world, and you said that all these EVs came in, rushed into the market, and many of them are now finding out that it's a lot harder to be profitable, and many of them will go out of business. And you're warning that the humanoid bot market's going to be the same. There seems to be a lot of startups now jumping in, and you're saying that the humanoid bot market is going to probably be similar to what happens in the EV market. Be careful. And then the second point we want to talk about is, as investors, you're warning that some investors, if you come in later, you're going to get screamed, and you can explain that. But let's start with your first premise, that humanoid bot companies are similar to the EV market. You want to explain that?
Yeah, absolutely. And it has not so much to do with the technology, etc. I'm actually very bullish on robots. I think Elon is right. This is going to be the future, and it's going to be a ginormous market, and probably most people can't even fathom how large it can get in our lifetime. And so that just to set the base. The problem I have is really sort of a high level. There's always, and I'm older, I've been in the market for a long time, I've seen many bubbles. There's always very, very similar patterns, and it doesn't matter whether it's internet, broadband, electric cars, name it. It's always kind of the same thing. However, this time might be slightly different. I can get to later for a bunch of reasons, but bottom line is, when there's something emerging, and I think phrased it in my post as the next big thing, then you have this hype generation building, and then a lot of smart people, and I think Brad Adcock is one of them. They're very early seeing these opportunities, and they jump on it. And there's a certain class of investors. Again, I don't think they really care about whether the company will succeed, but they know, okay, I see this company because there's a certain amount of hype building. If this hype gets big enough, I can later IPO the company, and whether it succeeds, they don't really care. There's a big sentiment is huge. And when you, for example, listen to ECM bankers, they will always talk about equity story and storytelling and things like that. And this gives you a clue of how a lot of these people look at situations like this. It's about the story. And you might, or as I do, often replace the word story with the word hype, because very often there's just too much hype. And so basically what I see right now in the robotic space, people try quickly to basically copy what Tesla does. There are now various robots popped up that look very similar to Optimus. They make the robot do something, and you have to listen very, very carefully to catch the nuance of what these people say, and how and when they say certain things, and how and when they leave out certain words. For example, we're probably going to talk about Figure AI at some point. There was this video where you saw this robot doing stuff. In that entire video, there was no mentioning of them using AI to make the robot do what it does. However, every time when I see Brad Adcock post something, it's hard for me to find a tweet where he's not talking about Figure AI using neural nets in AI, etc. So these are these small breadcrumbs. Sorry, they may appear like, oh, it's just you know. Unimportant detail nuance, but no. When you have no data to work off, I mean, we have no financial data on Figure AI, we have no performance benchmarks on the robot, nothing. We just have a fairly rudimentary videos thus far, unless I missed something. So what can you go by? You can go by the same thing we had about Nikola. In the early stage of Nikola, we had all these Trevor Milton interviews, and all you needed to do, and you didn't have to listen to many of them, you just had to listen to a few of them that were in time separated, and you had to listen to the details. And what you quickly noticed, that the details didn't match. That for example, when you do the same for Elon, and the interviews can be years apart, Elon is the ultimate broken record. The guy always says the same stuff. He's ultra consistent. Why is he ultra consistent? Because he's honest. Milton wasn't that. Milton was just making stuff up. And the more liars lie, the harder it gets to keep the story straight. So if someone listens very carefully, you can see the nuances. However, if we go to Figure AI, I think Brad Adcock is a different quality. He's like, I described him in one of my posts as Trevor Milton 2.0. He's a more advanced version. He would not make such basic instincts. So I think it's hard to detect in his case, but I already found some traces of that. And I stop here.
AJ, I want to just interrupt a little bit, okay? Because I do want to let you have your chance to speak, but I'm concerned that we're not addressing the key topics and we're moving away from that, right? The first topic we should talk about is you believe that the robot market is going to have explosions of many startups, and you think that it's going to copy what happens in EV, where many of them will fail because you don't think it got to profitability, and it's a lot harder than you think. That's step one. The step two is what you've been now addressing, which is now you're picking on certain companies and you're saying, hey, you can see how this is all hype. And then you're trying to say this is hype and here's examples, because they're really not giving that. But that's a separate thing. I mean, this happens with every industry.
Yeah.
And then the third thing is be careful of certain investors. So can we start with that very first thing, which is you believe that robot startups is going to follow the EV startup model where many will go out of business? Let's have that debate, because I've got certain
thanks, Robert. Thanks, Robert, for getting me back on track. I have this tendency of getting off the path quickly. So on the first point, so basically my thesis is derived from EVs. Basically, the reason why all these EV companies struggle is because Tesla set such a high bar in terms of lowering costs, etc. And the point I talked about earlier, it's not about making a good car. It's making about a good car at competitive cost. And in the robotic space, actually, I have no doubt that Figure AI will figure out a good robot, and it probably will do some useful stuff. But any good robot is useless in the marketplace if it can't compete on cost. If, for example, Figure AI makes a highly capable robot that you can put in all kinds of factories, etc., for, let's say, just $50,000. Sounds good, right? It replaces maybe half a worker. It will easily recoup. It's a great investment. But hang on a second. If Tesla sells a robot with comparable capabilities for 35,000, who is going to buy Figure AI's robot? Nobody. And this is kind of the situation it's complicated in order because it's a very emotional, etc. buying decision. But So it's harder to see. But in robots, it will be even clearer, because in robots, nobody will give a fridge about the brand, the paint, the panel gaps. No, it's about the utility the robot provides per unit of currency. And when you look at Tesla's advantages is rooted in cost advantage, rooted in deep tech. And if the other guys can't replicate all these Tesla features, low cost, great tech, they can compete, even though they make a maybe possibly very good product. It's all about cost and capability. I'll stop here.
Okay. I'm going to let CERN reply to that, but I think you're making the assumption that there is a competition between these companies. We're talking about labor, which is 50% of the world's GDP, which is $40 trillion a year. And so could Tesla solve all of that need, and then therefore they're competing? Or is there just so big need out there? It's everybody who will have a space to sell. It's who can make it. Like Tesla might make, 2 million next year, and 5 million, 10 million, 20 million, 30 million, 100 million, but that's still not enough to address all the need. Let's have CERN address what you just said.
Yeah, I think AJ is raising some really good points, and they're worth thinking about. First of all, I guess I would just spend a little bit of time comparing the auto industry to what we think the bot industry might look like. So the auto industry, to make a car, you have to build a very big factory. You have to have this massive supply chain behind you. It's very capital intensive, uses a lot of energy, a lot of people, a lot of mass. Now, compare that with a humanoid bot. Tesla Optimus, as far as we know, weighs about 3% of the weight of a Model 3. So to make one robot, you're moving only 3% of the mass around that you are for a car. So manufacturing complexity should be a lot less for a bot. Maybe it isn't today, but it should be once companies are making, a certain quantity of bots, it should be much easier. The other thing too, automobiles are a consumer product. People's tastes change, right? So the auto manufacturers constantly have to come up with new models and new designs, and they're chasing their tail all the time. The humanoid bot, the big challenge is coming up with a design that works, that is functional. And yes, it will improve over time, but probably not because consumer tastes change. In fact, if you want to change the look of your bot, well, put clothes on it. Like that would be an easy solution. You don't have to really change the physicality of the bot that much. So that's another factor I think that's different. Another major one we're thinking about is automobiles are very economically sensitive. When there is a recession, one of the first things that people spend less money on is cars. They defer that purchase. Now, the likely buyers of humanoid bots, at least for many, many years, are going to be companies. And you know what? When there's a recession, they want to save money. So actually, the demand for humanoids could actually go up in a recession. It could be a very counter-cyclical product versus a car. And the other thing too is with the modeling that we've done, automobiles, we know what the margins are in automobiles, and for the most part, they're pretty low. And sometimes for automobile makers, even big ones, the margins go close to zero for a period of time. Again, because of a weak economy. But for bots, the margins should be a lot higher. And one of the reasons is, again, that when we model out the potential costs of making bots versus the potential revenue, there's actually a very wide margin in there. It's almost like software versus, very low hardware margins in cars. But I think, to AJ's point, we don't yet know what this industry will look like because the bot's made up of two parts. There's the physicality of it. There's the actual bot, but then there's the bot brain. There's the AI part. And I don't think we know yet what that part is going to look like. Will there be one company that comes up with the best robot brain and everybody else is behind? Or will the bot industry kind of collectively at the same time, kind of like we've seen with large language models, come up with something that's pretty comparable? And I think for me, that's the biggest unanswered question at this point.
And then, Cern, do you want to talk about the gross margins?
Now, I can actually
Well-
say, sorry to interrupt you guys, but I fully agree with you. So just be clear.
Yeah, I think we're likely on the same page here, AJ. The challenge with automobile makers, and particularly the new EV startups, they have to get to a certain manufacturing production level before their gross margins, turn positive, before they have any hope of making any money on EVs. There's this canyon of losses that they go down, and AJ's got a great chart that compares Tesla versus the other EV makers in terms of the gross profitability of those companies. I don't think that the bot market is quite as severe as that. Again, it's more like software. The hurdles are much lower in terms of how much the companies have to produce and sell in order to have some gross profits. And I'm sure AJ has some thoughts about that.
Yes, I do, but I wanted to give the other speaker a chance because I interrupted him before.
Hans? No?
I would add, yes, that it will be actually instructive to continue to watch the EV market evolve, because I think that the software opportunity that we'll see come to fruition as cars can become autonomous will actually be somewhat instructive. That at least for vehicles, those companies that were really primarily trying to compete purely on hardware are increasingly going to have a tough time, especially if they're Western companies. I think that if you only want to compete on hardware, then you really should be looking at primarily Asian manufacturers, because those are going to be the leaders in low cost products. That it's almost like an innovator's dilemma, where the disruption is primarily bottoms up, if you're looking at hardware only. But then there is this kind of one-off opportunity for a company like Tesla to start at the high end of a market to kickstart a technology revolution and then come down. And so, most existing companies in the auto market are really kind of in between. They're, if you're looking at a Ford or a GM or any of the other major legacy auto companies, even internationally, like a Fiat Chrysler or anything Renault out of France, that these companies over time are going to compete with Tesla coming in from the high end of the market, and then low cost Chinese competitors coming in from the low end of the market. And there's nowhere for them to retreat. They can't even retreat up market, because that area has already been taken by Tesla. And so that really leaves the only area left for them to be able to survive is on software. And none of them have been able to demonstrate any capability whatsoever to produce high quality software to operate their vehicles. And I think that if we see someone coming into the market and providing kind of that Android software solution to the rest of the automotive market, that will be basically a foreshadowing of the types of competitors that might actually have an advantage in the humanoid robot space. That there really has to be a company that is exceptional in software, since we've Cern pointed out the majority of the value to be developed by humanoid robots is primarily going to be soft. Like the hardware will probably collapse over time to a couple of highly competitive low cost manufacturers, and then the software will be where the value kind of accrues, and you'll have to find, okay, who's the best company at developing high value software that can run off of whatever non-proprietary set of hardware that a fully vertically integrated company like Tesla will have.
The other thing too, I would just add, is that the bot industry is essentially benefiting from the hard work that the EV industry's done, particularly when it comes to batteries. So when Tesla first started, there was no battery supply chain for automobile batteries, right? And that's been built up over the years. Bots are just piggybacking on that. So that's one advantage. The one area, I guess, where bots is having to develop their own is in the actuators. And that is becoming the key component right now for the bot. And also right now, it looks like the most expensive part of the bot. And so that's where there's an opportunity, I think, for businesses to operate at scale. And that's where certainly Tesla is likely to have an advantage.
IJ, can I ask you this question? I think all of us would agree that there's going to be many, many failures. Many of these startups. First of all, we agree that there's an explosion of startups and that many of them will fail. I think where we're probably not agreeing so much is when you said that there might only be, just like in the EV world, a handful of successful companies. That's, I think, what we're disagreeing on. Is that right, AJ?
I think I haven't fully landed on. So right now, I just, maybe it's also my ignorance. Right now, I don't see really any credible company emerging. It could very well be that, I don't know, a few years from now, or not even that long, someone like Google pulled some bot out of nowhere because they had some whatever skunk works team working somewhere in the Nevada desert or whatever. And so you never can rule these guys out. Or as we see in the EV space, I mean, we saw these smartphone makers like Xiaomi, etc., launching their vehicles. Yeah, trying to exactly so. And you know, you never know, because it's all has to do with funding, etc. I mean, if you fund a company like Rivian with over 20 billion, they can hire the best people, etc. You can get very quickly to a very good product. But again, as I said earlier, and I stand by it, it doesn't matter how good your product is. If there's a competing product that is similarly good but costs less, tough luck.
I think that's where we disagree, right? So I think that the market is so big that it doesn't matter. Like, let's say that, and I agree. I tell you right now, Tesla is magnitudes better. They're going to manufacture at scale at 10 times more than anybody else, if not even more, faster, earlier, and they're going to have it at lower cost. All that is true. But do you think that that means that 5 years from now, a factory wants to buy bots, that Tesla will be able to provide that bot for all the need and demand by everybody that wants it? Or do you think that maybe they'll only make 100 million at that point per year, and the demand is like a billion? You know,
I think no, we will see a lot of companies selling bots to companies, but and but for a different reason than one I think you just laid out. And I would use one of Søren's points earlier. Making a bot is, in large numbers, is much easier than making cars. He pointed out to the 3% weight. When in a manufacturing context, it's huge, because what you can do with light small parts, you can use extremely highly specialized machines with very high throughput, which you cannot use for components with heavy math. For example, a several hundred kilo component you cannot move with, I don't know, 10 meters per second, but you can easily do it with small components. And anyways, we get too much into the weeds here, but bottom line is you can spool up very quickly a very high volume bot production if you want it. And so, but this is a different point. My argument is that we will see a lot of bots, but they will still fail, just as we see a lot of EVs that they're failing. And why? Because there will be a lot of companies with a lot of money, Apple, Google, whatever, whoever comes in, and they will try to compete in this market, and they will subsidize these robots, just as we see in EV markets. A lot of the large OEMs, like in the earlier days, I mean, BMW does better now, but not long ago, the BMW's BEV sales, they were totally subsidized by the ICE sales. And what I expect is, as the companies try to compete later with Tesla in the bot space, they will also subsidize. And for a simple reason, you need to have the bots in the field to learn, so the bots can collect data, real world data, etc., and also how you deploy the bots, and you know, all the basics, simple stuff, software update in the field, maintenance, blah blah blah, all this stuff you need to learn. And for that you just need numbers. And and for that very reason, the well-funded companies will offer very attractive deals to a lot of companies so they can penetrate the market to a certain degree and collect all this necessary data. So this is basically the phase we are in right now with a lot of these startups. Just look at Rivian, that they're losing ungodly amounts of money per vehicle sold. And it's not like they're in the third or fourth quarter of ramping. They've been ramping for over 2 years now. They're still nowhere near of making money. So you see, and there's something similar I totally expect in the bot space. There will be companies with huge fundings. They will be selling their bots at huge loss, so they get some sales, and it's going to take I don't know how long, but at some point, then sort of the hype will fade. The funding will get more difficult for the not excessively funded companies, and then we will see the problems that we see right now in the EV space. I mean, every few months or quarters, we see an EV company fail, go bankrupt, and I don't think we have seen the last EV bankruptcy. Quite the opposite. We are probably just entering that phase, and sort of the same sort of cycle. You should think about the things in my mind in cycles. We are just at the very early beginning of that bot cycle, so that's why I don't see any credible company right now except Tesla, because they have the manufacturing pedigree, etc., and have done real world AI longer than any other company I'm aware of. So they just, the best company as far as I can tell. And from an investor perspective, and it's my last point, and then let other people talk. People, I think they're trying to be overly complicated with investing. At the end of the day, it comes down to identify the future growth industry, number one. Number two, identify the winner in that growth industry, and you're done. I'm done here.
I think AJ is raising some really good points. I think it's maybe a matter of timing. Let's say, this year, next year, year after, whatever time frame you want to put on it, that humanoid bots became capable enough to being deployed in the workplace to do useful work. Right? So let's put some numbers on it. Let's say Tesla is able to make their bot for $10,000. Okay? Or 15, whatever number you want to pick. Let's say it's the lowest in the industry. And Tesla is able to command revenue for that bot on an annual basis, let's say, of $90,000. Now, let's say there's a competitor whose cost to make the bot is $30,000. It's twice that of Tesla. And they command a revenue of $90,000, or let's say it's only $75,000. They're still making some profit. It's not, in my view, it's not as dire, it's not as severe as it is in the EV business, where they're just losing so much money. Now, maybe my little example doesn't come to fruition. Maybe it is a lot harder than I think for bot companies to make gross profit on producing bots. Maybe it will be a lot harder to produce a bot for even $30,000. And I guess that remains to be seen. We don't know that yet, but when we look at the components of the bot, it doesn't seem like it will be that complicated to make these things at a reasonable cost. And again, it should cost less than a Model 3.
Could I just add one other sort of angle to this? You should not count out Elon's competitiveness. If he comes in with a killer price, because he can, he doesn't have to make 90,000. Let's say the bot is 20K in the beginning to make, which I don't believe is the case, but let's say, and he sells it for 25. That's still okay margin, because he knows, just like, the theory is that most of the old Teslas can be turned into robotaxis at some point in the future. If this is true, it becomes the greatest asset appreciation in human history. Okay, think about the bot. You send out the first generation of useful Optimus. It can't really do much. It makes mistakes. It needs a bit of supervision, blah, blah, blah. So you sell it for cheap, 25K. It costs you 20. But with the revenue, you can fund more compute, more training, you get more data,
Yeah.
blah, blah, blah. In a few months, you send out the next update. And then the bot makes less mistakes, there's less damage, needs less supervision, it becomes more valuable. But what does Tesla do? Oh, I charge you 5K for that update. And so it goes on. The hardware stays the same until at some point, of course, there will be a replacement, but Tesla just keeps updating and will ask the customer for some sort of some fee. And this way, he basically gets the foot into the door of all the companies at completely at prices nobody can compete with, and collects all the revenue, skims all the revenue, and this way he can completely lock off the market if he's as good as I think he might be with his product. And then the other companies, even if they make good products, they simply can't compete. And in the EV space, and that's why it's so interesting to compare the two. Last year, early January last year, 2023, Tesla did this huge price cut. What happened? In the same week, there was all the big Chinese auto companies came together, and they had a meeting. It has been well publicized. This is not like some theory or whatever. You can read about it. They openly wanted to collude on pricing. But this was even for the Chinese regulator too much, and said, no, you can't do this. And then the price war started. And why did they come together? Because they simply don't have the margin. I've reported on some of the Chinese companies, the margins are awful. And that's why they tried to collude and stop the price war. But no, regulator said no, and Tesla did the price cuts anyway. And that's why we got into the situation which basically created global price wars. It's just hard to track all this stuff, but when you look closely in various big markets, you can see all the discounts, etc., amongst all the other automakers, and who kicked it off? Tesla. And and I'm about to stop here. And so Tesla is not, oh, I want everybody to succeed, blah, blah, blah. We can't do it alone. I think it's bullshit. Tesla is extremely competitive, and they just want to win. And if you're not fast enough and can't follow, tough luck, you're going to die. And I think the same, right now, I think is likely to happen in the bot space, because for a player of Tesla's size with so much organic funding, they don't need to seek investors. They can do whatever they want. They can also plan a long time. They don't need to push out a premature prototype. They can make it great and basically can steamroll the market, because they don't need to launch the robot now or next year. They're making enough money. So anyway, I'm rambling. I stop here.
Yeah. So I have to really think it through for myself, because when the way you explained it was interesting. So if I think of robotaxi, I agree with your concept, which is there's going to be the first mover, and because of the advantages of scale, there's going to win most. And then there will be a few others that will, meet the rest. But then when I think of the bots, I think it's good. I still believe, after what you've said, that it's the opposite. There's going to be a world filled with many different bot vendors. There's going to be one massive successful story, and it's going to be Tesla, but there's going to be so much room for the others. I like the way John Gibbs of Dr. Know-It-All, the way he said was, when you framed your argument, you said, take a look at what happened to the EV market, but you were comparing it to the EV market of 2005, when there was existing ICE cars. There was, that was the existing thing. What you should be doing is comparing it to the beginning of the car business in the first place, when there was zero cars at all, 1905 or whatever year it was. And when that happened, many startups came, many startups failed, but there's like 30, 50 car companies that exist today that have existed for 100 years, that are massive brands for 100 years, because it was there was this new industry that was being opened up. And because it's so massive that it's impossible for one company, no matter how incredible Tesla is with their manufacturing, how many factories they can build each year, we're talking about $40 trillion per year, the labor market. So can you actually build that many bots that quickly of the demand by the people, the factories and consumers? So, and then like the way CERN was explaining it, that, you know, the ability to build the bot and then to sell the bot at a price point, there's the margin is so high because they can work for 3 shifts at a time that they'll still make money even if Tesla does a price war. But the other point I just want to make too is that, let's say that Tesla does win, and I you know, I'm a big investor in Tesla, right? So I do believe that they're going to succeed. But it's this idea that they're going to be one of the handful to win. Like, let's say that that's true. There's like a car, an EV has one use case, which is transportation. Done, period. Versus a bot has unlimited use cases. So if you wanted to, I'm going to make my bot the best bricklayer out there, and it may not be humanoid at this point. You know, I'm going to make my bot the best surgeon out there, and it might not be humanoid perfectly. But, you know, there's going to be so many things that I can say, I'm going to focus on one use case and I'm going to make it the best and optimize for that. And then there's going to be bot animals. And so you can then say, okay, you're right, you won the humanoid, but I'm going to go and do bot animals, you know?
Can I, so
Yeah.
so you made 2 big points. Maybe I tackle the first one first. So about the number of future companies, and I think I didn't make myself very clear. When I look at a market, I look at it from an economic perspective. Let's take the smartphone market. Apple has nowhere near the majority
50%.
of the market share. Nowhere near. At best, they're hovering around not even 20, I think. But they take, it's widely known, Apple takes the lion's share of all the profits. And so the number of smartphone makers, I don't even know. There are dozens of smartphone makers. A lot of them we can't even name because they're in some country we don't live in. But they're selling several dozen thousands of units, whatever. But bot and in the bot space, as you described, there will be many different kinds of bot companies. Yes, there will be, but there will be horrible investments because they will not make any money because they're serving one little niche which Tesla is not touching because it's too small for them to bother. And this is where I focus. And then they make a little bit of money, but it's not going to be an Apple-esque margin. And that's why for me as an investor, it's completely uninteresting. And there can be dozens of these companies. I don't care about those. And we see this all the time. And just be very clear, in the future, we will also have tons of EV companies, but it will be just like in the golden days of the automobile, as you described. We had like in the 50s, 60s, and 70s, with so many independent auto brands. And it was interesting, it was fun. They made so many different automobiles. But when you looked at what happened to them, they were all bought out and merged, and not because they were such great assets, no, because they were about to die. And so it was actually horrible economics, and only a few players, even in the golden time of automobiles, actually squeezed up some acceptable margins. And when you look closely, anyways, I could go very deep into this, but I stop here. But bottom line is the number of companies completely irrelevant, because what we see in these markets where we have this networks effect, and I believe robots also carry an element of network effect because of the training they collect every second they work in a factory, they will also create something similar. And hence, yes, there will be, just like a smartphone market, many companies, but most of them is not going to making attractive returns, and hence the valuation will be very low, and hence it's not going to be interesting to me. And then when we look at the second part of the second point you made, it's about all the different types and even animal robots. I fully agree. There will be an unbelievable variety of robots roaming the world. And there will be highly specialized robots, but the true value of the Optimus and why it's so compelling is because it's universally deployable in theory, and this makes it so valuable, because a highly specialized bricklaying robot, I mean, we already have robots that 3D print homes, but the problem is they still make no sense. You have to set them up. They're highly limited in what they can do, and a highly specialized robot by definition can do certain things, and this is where Optimus still has some place. So I think the niches where these highly specialized or animal robots are really superior to Optimus, it will be very small, and hence the market will be very small, and hence the money you can make is probably very small relative to the big ones. So I stop here.
I think I disagree with that. I think intelligent agents is going to be a massive market, even if it's small, even if it's a niche. But okay, that's interesting. I'll have to think about it. Hans, you haven't said anything for a while? Sorry, Cern.
Let CERN go. I don't have anything really to add.
Yeah, I have a couple of things I think that may be helpful here. One is AJ mentioned that, let's say a bot maker makes a bot for 20,000, and that's okay, that's debatable, but let's say they can. And let's say Tesla, I think in AJ's example, decides to put the pressure on the industry and sell their bot for 25. Now, again, I don't think Tesla will actually sell bots for a whole host of reasons. I think it'll be robots as a service. So let's just, for argument's sake, say that 25,000 is $25,000 per year. Okay, that works out to, if the bot works 7,000 hours a year, it works out to $360 an hour in costs for the bot, for the company that's deploying the bot. Now, in the Western world, $360 an hour is much lower than any wage cost for any amount of work that any employer is doing. So that at that level, the hurdle rate is extremely low. Now, here's why I don't think Tesla would do that, even in the early days, even if they could. Because Herbert, AJ, Hans, and I would form a company, and we would buy every single bot, or lease every single bot we could at $360 an hour, and we would go out and offer at double the price. There would be such a market out there for renting bots at even a higher level, because the demand would be there, because these bots are way more useful than just $360 an hour. So in my mind, Tesla has to price the bots appropriately in the marketplace. Otherwise, they risk creating such a sort of a black market for the bots, right? Where somebody is scraping off the money for themselves that Tesla could be selling them for. In fact, they might even find themselves at the end of a shareholder lawsuit for shareholders saying, why aren't you selling these for where the market actually is willing to pay for them? But let's just assume that they do sell it for 25, or offered at $25,000 a year, $360 an hour. Okay. In my model, I've got, if I put that in, let's say the bot lasts for 6 years. So it costs them, on an amortized basis, $3,333 a year for the bot. I've got bot maintenance costs of $6,000 a year, right? If you're going to run this thing 7,000 hours, you're going to have some serious maintenance costs. And then I've got other operating costs of $3,000. So their total costs is $12,000. So they're getting $25,000 in revenue. It's costing them 12 and change. So they have 50% gross margins. Add in some other money for operating costs, and just for if they deploy 1.5 million, okay, that's 38 billion in revenue, and it's 14 billion in profit. Apply a PE of, let's call it 70 to that. Yeah, it's $1 trillion valuation. And you could say that's Tesla. You could say that's Figure. That's another bot company. The opportunity here is so enormous, even at such low pricing. Right? I've said this is nutty. Like every time I run these numbers, it is absolutely nutty. And this is only deploying 1.5 million bots at $25,000 a year. So I do agree with AJ. I think over time, absolutely, this industry is going to consolidate. But if we're right about this industry being the biggest industry that we've ever seen, because human labor is so big, therefore, if human labor is going to be replaced by bots one day, over time, many decades, it also follows that the humanoid bot industry is likely to be the biggest industry we've ever seen. And so in that way, I think that this is such an enormous opportunity. The scenario that AJ is talking about, I think maybe takes a little longer to play out than perhaps we've seen in smartphones or EVs or other industries. That's just my 2 cents on that.
I just wanted to respond on the 25,000. I just pulled this out of thin air, really, just to make the prior point, the example of the prior point. So it was not based on what I think will be the pricing, because honestly, I think we're too far away from that right now. Because there's also a completely different model, I think, I'm not sure if I've seen anyone talk about, but I've seen it in the consulting industry. And what they do is they go in and, for example, they sell you a cost-cutting project, and they are being paid. They're getting a percent on the cost saving they are generating. And so what Tesla could do is they could say, look, I sell you these bots, and they replace X amount of labor, which costs you, let's say, I don't know, 10 million a year or 5 million, whatever the number is, and we get a cut in on this cost saving. And then you can obviously work out the details, but overall and duration and all this stuff. But this is how you could do it. And then also I've seen in other industry where, for example, when a good friend of mine works at a company, they sell a high-tech product consisting of hardware and software. They're making, of course, most of the money on the software. So they are selling them kind of a plan where for the next 6 years they're guaranteed to get all the software updates, and then they get extra money there, like a recurring. You have basically an upfront payment plus recurring revenue. So there's all kinds of interesting stuff you can do. But ultimately, I think if I was Elon in a few years when I'm about to launch a product, I would look around the marketplace, look at the competition, what they are doing, what they are pricing, and I would take this into consideration in terms of what I put my pricing it.
I'd like to pull back in part of AJ's definition of a type 3 investor here for a second, because I think this will help to clarify some things. One of the things that you said, AJ, and correct me if I'm wrong, was that really, on one hand, you could say those are kind of retail investors, but ultimately, more than retail investors, it's just investors with a very long time horizon who plan to buy and hold the stock for years and years and years and years and years. And is that correct, AJ?
Yes and no, because from my experience, and again, I've been in markets for over 2 decades, there are very, very few really, really long-term holders. Yes, people think, oh, I've been holding this stock for 2-3 years. I'm a long-term holder. And the next month they sell because the sentiment is low. So we are talking, if you really talk about long-term holders, you're talking about a really, really small part of the market, if we're honest.
Okay, well, we'll say investors who are entering into an investment, at least with the idea that they are going to hold for, 5 years or more. This really makes sense what you're saying, because if you do look out 5 years or 10 years, then the risk of any of these other companies who are not going to be as profitable as Tesla really actually increases exponentially for each additional year into the future. And so while you might be running a DCF thinking, okay, this company could be 100 times the size it is today 10 years from now, but the actual risk of that coming to fruition that deep into the future is growing maybe as fast or potentially even faster than the size of the investment is growing. And so if you're then discounting that back to today, it doesn't make nearly as much sense. And I mean, that's definitely, I think I resonate very much with what AJ is saying, because I mean, this is the reason that I'm invested in Tesla and I never invested in any other EV company, because I never saw management teams who displayed a combination of two things. One of them is technical competence. And so Lucid is an example of technical competence. Like, the Lucid Sapphire is one of the best engineered cars on the market, potentially better than Tesla. But it's because they spared no expense. And then, so the other piece of discipline is cost discipline. And that's what Lucid doesn't have. Maybe cost discipline is something that you could assign to another competitor. I don't really want to focus on that too much. But that combination is something that Tesla has. They are focused on both technical competence and cost discipline. And, if you can't find someone who has both of those core competencies, then it's hard to imagine that they'll be able to actually be competitive in the long term. And as Tesla is going to be the leader in this space, as far as they're going to be the first one to really reach scale with massively valuable things, everyone's going to be trying to compete with them. And so they're going to, in order to catch up to Tesla, they're going to have to sacrifice, and I think this is part of AJ's point, they're going to have to sacrifice something in order to create a product that can pull customers in. And it's most likely going to be cost. And so they're going to build structurally into the way that they operate the company, even if, and I think this actually gets worse, honestly, if you look at a subscription model versus a one-time sale model. I think that they can get upside down so deeply on the unit economics, justifying lifetime values that they can generate off of a bot that are theoretical and aren't durable over time, that they'll justify massive expenditures in capital today, thinking that, oh, I'm going to make $1 million off of one robot over the course of the next 10 years. And I think they're going to probably overestimate the amount of lifetime value that they can get out of a bot. They're going to overinvest in the short term to get capital. And I think that, yeah, a lot of those companies, you're going to see them get funded. Like, all of the incentive structures are in place. They're going to get big. They're going to have names. They're going to sell bots. They're going to look really good to a lot of investors. But just like AJ said, they're not going to be able to really be profitable companies in the long run, even though there's lots of profits to be made in the sector, for a period of time, that they're going to end up really wasting those profits on growth that doesn't actually end up being sustainable.
Yes, so Hans, I just want to comment on Sapphire comment. I think you said it's like potentially one of the best EVs on the market. But I just want to repeat what I said earlier. This is actually a red herring in the real world when it's about making great companies who can survive, make money, etc. If you give me $10 billion, I will make you a better EV than a Sapphire. I'm not an engineer, I have no clue. But what I will do, I will buy out the best Formula One team with $1 or $2 billion, and then I will hire for another billion or 2 billion. I will buy the top teams from the top suppliers, and I buy for another 100 million the top executives I can find in Silicon Valley who get stuff done, and I mix all this together, and I give them a $2 billion bonus if they can make me an awesome EV. It doesn't matter how much it costs. An awesome EV that can beat the Plaid, the Sapphire, and can carry 5 passengers comfortably for 700 kilometers. I can do this. Just give me 10 billion, but it will cost 1 million production cost.
100% agree. Yeah, that you made the point that I was hinting at much better than I did.
And Hans, just to touch on something you mentioned a minute ago, I think that's a good point. I think that the bot makers run the risk of assuming certain economics for their bot. The one counter that I would make to that is that they are all making a product that should, over time, become better and better and more capable. So if a bot, let's say, enters the market and it can replace somebody that's doing $5 an hour, using that wage rate as a proxy for the type of work they do, then next year or the year after, it should be able to do $7.50, $10 an hour work. So in that sense, these bots become more valuable over time and their economics actually improves. And so this may be a very unique product in that regard. It's a bit like Tesla selling an EV and then it becoming a self-driving vehicle at some point in the future, right? And Elon's talked about how that could be the biggest value creation we've ever seen. You suddenly overnight unlock the fleet to become basically money printing machines. And in essence, the bot also is like that, but maybe sort of stepwise. The money printing machine grows in its capability over time. So that's just one counter, I think, to what you mentioned there, Hans.
Well, and I think also terms of the contracts would be very important there. If they can lock in contracts over a period of, say, 5 years, and then they have guarantees on revenue over that point in time, then that's much different than if they are assuming 5 years worth of value and don't have any sort of contractual way to enforce that or provide some security on the back end.
If they're confident in their capabilities and that the bot will improve, they should just have a month to month, and they can raise it whenever the bot improves.
So let's talk about whether or not we are the hype. Clearly, we're in a hype stage. There's no doubt about that. The question is this overhyped, right? We talked about that possibly this market is the single largest market that's ever been addressed before, right? Labor market, as opposed to, let's say, energy or automobiles or pharmaceuticals. This is pretty large. So there's going to be hype, but is it overhyped? And then, I think a question that's still kind of out there, AJ, too, I want to ask you, the kind of like even I don't think anybody here knows the answer, is I've heard simultaneously, at one hand, people say that this is the single hardest challenge to ever create an intelligent humanoid bot. And so all these companies, and these are just a fraction of the ones that we found. The ones in red are, in the Asian countries, and the ones in the light blue are the Western countries. And there's probably many more who are attempting to try and get into this business. I've heard people say that this is the single largest challenge ever, and it's going to be very difficult, and the hurdles to get to this is very difficult. On this other hand, we've also been watching left, right, and center labs, 3 PhD students showing that 50 teleoperations is enough to teach a bot how to be able to do, a task autonomously, 80% accuracy rate. And then they were able to show a bot on wheels, kind of like very simple, with simple $20,000 hand grippers, to be able to do everything that you need in a home. Open up a beer bottle, open the fridge, fold clothes, clean, make the bed. So it's hard to know yet how is this something that's going to be very easy, or it's going to be very hard, and it's going to be something that a small player can come up and have a useful tool. So that is very interesting, and I don't know if anybody here can answer that, but what's your comments?
I can start off unless anyone else wants.
No, go ahead, AJ, please. Yeah.
Okay, so in terms of the hype, the funny thing about the hype is always you only really know about it. You only really know after the hype vanished. I think, and the hype. Let's be more specific. What we mean by hype. Hype is excessive valuations. This is what we mean by hype. And if a company, let's say, IPOs for 10 billion implied market value, and then 2 years later it's at 500 million, yes, there was hype in that company, quantifiably, objectively so. So that's one thing. Then when it comes to these quite amazing feats that we see by even relatively by teams with relatively low funding, etc., opening a bottle, doing this or that. I think at the end of the day, it's all about the details. For example, if I have to push the robot into my kitchen, open for the robot the fridge, give him the beer bottle, give him the little tool to open the bottle, and then he can open the bottle, it's completely useless. It's a nice party trick, which you show once to your friends exactly, and then it's done. Nobody pays for that. But if I get home and I call my robot and tell me, oh, get me a beer, and there's all these steps in between, and I don't need to do anything, then it's useful. But if I have to do any of the steps in between, no, it's not useful. And that's the crux. There are so many mundane tasks that actually are a composite of lots of micro tasks. And each and every single one of these micro tasks has to be mastered for the entire task to have real utility. And I think that's the issue here, and that's why the nuances, they make all the difference, and that's why it will be so hard to see which company only produces vaporware and which company is actually some path to create some useful product. And that's why it's going to be super exciting next couple of years. But right now, I simply haven't seen a compelling use case where I see, okay, people will pay for it, but it's early days. And of course, if you want to make money in these things, you always have to also take some risk. It's part of the game.
Yeah, whenever somebody says that, I just need to jump in. today there are bots being sold now that can do pick and place very effectively. I mean, it's not something that it's like people going, it's going to be years before they're going to be useful work. We're getting there, very close. Pick and place, very simple.
What can you explain or elaborate on the example
Yeah.
you have in mind?
The example would be Digit in an Amazon warehouse where there's small boxes that or bins or totes, and it goes there, grabs a tote, picks it in one location, but it's not precisely in that location. It could be a kind of a random pick, and then has to put it in a random place, like not like the industrial arm, which is very precise. Grab it from here, put it here, and precisely. And then it just keeps doing that all day long. It just finds a tote, grabs it, and moves it to another area. And then they only move maybe 6 or 10 feet. They don't have to move that fast. They don't have to be as fast as a human. They just need to be accurate enough to be able to grab a tote. I'm not saying that these bots are yet at human speed and they're not quite yet as accurate, but clearly at this point, I don't know anybody who thinks that pick and place is going to be an impossible task. That's going to be useful work for factories very, very soon, if not now already.
Okay.
I was just going to add on to Herbert's point. If pick and place is the only thing that these bots can do for a period of time, they are still incredibly useful. There is a market opportunity of millions for just that one task alone. And so even if you get to the point where it's pick and place and then something else on top of that, then suddenly the market opportunity magnifies. The way I look at this in relation to Herbert's question is there too much hype? I think AJ's answer is really good in terms of valuations. We haven't begun to see it yet. And the way I think about this is, if we're right about this being potentially the world's biggest industry one day, and let's say that there's an opportunity for a company to become worth $10 trillion, right? And we've talked about models before where we get to that easily. Let's say there's only a 1% chance of a company being worth $10 trillion, then you'd be willing to pay up to $100 billion for that today. There is no robotics company that has a valuation anywhere near $100 billion, not even close, right? So it tells me that we're not even in the beginning of the hype of this yet. We're probably, as far as AI goes, we're in that hype cycle. And people a year ago were saying, is NVIDIA overhyped? And they're still asking that question today. And we'll probably still ask that question a year from now. And we haven't begun to see the hype cycle on this yet.
Hans, do you want to answer that question? Hype?
I like CERN's framing on it. Just probably if you combined all of the companies that are into robotics today, it's probably not even that $100 billion number. And so I would say, and obviously we're typically pretty deep into the weeds on tech companies in this community. And so if this is something that's capturing our imagination right now, and it's something that we're having to have these types of conversations on, well, there's a long ways to go. So I think anyone who's listening to this conversation anytime here in the near future can feel relatively comfortable that they are early in detecting whatever this hype cycle is going to be, and it is going to be massive. I think, to AJ's point, though, there is so much uncertainty with any other player besides Tesla, for me, that as a retail investor with a limited amount of capital and long-term time horizons, Tesla is the only humanoid robot investment that makes sense to me personally. Now, that is taking into account all of my own risk tolerances, my own time horizons, and my own skill sets and my own knowledge. And so that's going to be different for different people. But I think that, I personally take AJ's points very much to heart, that I think his point is aimed at probably someone like me, and I would have to agree with pretty much everything he says from the perspective of someone like myself.
And I should sorry, AJ, I think this all
sorry
Sorry, AJ, I'll let you reply, but I just want to take this opportunity and to disclose. I think I should disclose that I am somebody who thinks that the humanoid bot market is massive, to the point that I formed a company with CERN. We formed two organizations, one called Human Bots and one called Humankind. And Human Bots is a software company that's going to be helping businesses with business cases of understanding how humanoids as well as human scale bots can be utilized in their organization. And eventually we are looking to become a fleet management company. We think that the industry is massive. And then we formed Humankind, and what this is a nonprofit that helps, just make sure that we have bot regulations and policies to help with, vendor cooperation, to make sure that it turns out to be a good world, a positive world, instead of a potential negative world. And then I do think that that the humanoid opportunity is big enough that I'm investing in as many humanoid companies as I can, small amounts, but still think that you don't know who's going to win at this point. So that's sort of my feeling. But bulk of my investment, I've not touched it, is still Tesla. I'm still very much, I believe that Tesla is going to be clearly one of the big players in the space.
Yeah, and I would say that
I just wanted to address one technical point that was addressed earlier by Hans and partially by Thurn. I think when you look at what's the total what market cap today, and as you pointed out correctly, there is minuscule. But I think what you also have to do is how much bot is priced in by non-pure play bot companies, and the obvious one is Tesla. Of Tesla's little below 600 billion market cap, how much of that is bot? You could say, oh, nothing, nobody prices in the bot, it's all auto and robotaxis. I would disagree with that. I have seen countless investors that told me, oh, I'm investing in Tesla for the bots. I don't care about EVs, blah, blah, blah. I heard the same about self-driving. They say, I don't care about the bot, blah, blah, blah. So I think there's a mixed bag of investors. And I think you can make the case that a non-zero amount of the 600 billion comes from the bot. How much it is, I don't know. Is it 5 billion or 50 or 100 billion? I have no clue. But there is a non-zero amount. I think you can even show this, but anyways, because the thing is about Tesla, if Tesla was only an EV company, I would immediately sell all my stock. I would never touch it at 500 billion, because I know the auto business is horrible. It's a horrible business, and as Sam laid out in the beginning, it absorbs huge amount of capital, has long cycles, blah blah blah. It's very hard to make money, and even if it's a global EV leader, you can at best really over a long term set it in today's dollars, maybe show 200 billion market cap, 300 at the very most, but that's it. So there's some other element, and when you look at Tesla's multiple, and this typically how you should look at this stuff is about 60 on a 12 months or 65, but of course Tesla's earnings are backloaded, so you a lot of investors that therefore look at the 24 months global, and it becomes much lower already. But that's beside the point. The point is there is some bot market cap mixed into a few other companies. So if you want to be sort of more precise, but it's impossible to quantify, you should also sort of at least qualitatively acknowledge and sort of acknowledge that that market cap is also floating around in the ether.
And that's a great point. And you may even make the same point with respect to NVIDIA, that, one of the technology platforms that they're working on is the ability to improve the quality of automation of industrial robots. And, they're also cooperating with and investing in a lot of these humanoid companies as well. And so, it could be that there is a portion of their very, very large market cap right now that is actually allocated in the minds of investors to this like smart, intelligent, AI powered robotic space, whether that's human or otherwise.
Yeah, and I would just add that certainly there will be a lot of big players with respect to NVIDIA. They're an investor in figure. So if we think it's smart that NVIDIA is in this space, then by extension, then we should hope that their investment in Figure is also smart. Now, they're not just investing in Figure. I'm sure that they'll play the field to some degree, just like Microsoft and OpenAI likely will as well. And that is smart on the part of those companies, is to bet on one or two or three horses. I do think that we will see more larger players enter this race, and I think we're just getting started. Maybe a few of the horses have left the gate already, but many more will join the race. If we are right about this being the world's largest industry one day, then it is imperative that Apple get into this game. And in fact, it makes way more sense for Apple to be in the humanoid bot game than it does for them to be in EVs. Humanoid bots, in some ways, could be viewed as a computing platform. You'll be able to talk to your humanoid bot. It's kind of like talking to your device. So it makes way more sense for Apple to be a player there. Not to mention the other big companies, and some of them we've mentioned, whether it's Amazon or Google or Meta, and a whole host of other companies. There is room for all these guys in this space. I'm relatively confident to say that I think we'll see in the next 12 months investments or announcements from the majority of those companies.
The other thing to think about is the governments, right? Like we've seen the EV space where there's a tremendous amount of penalties for the ICE cars, and there's all these incentives for the EV cars, and then there's these propping up of some of these companies because they want them to be like the national automaker. This is a different level, right, guys? Don't you think with with these robots, humanoid bots, like every country or some big ones are going to be heavily subsidizing, heavily funding. So that kind of throws a little curve to your concept of, they can't make it profitable because they might not need to, because it's a government controlled government kind of thing where they cannot lose and they need to prop up certain companies. But having said that, yeah, we don't know which companies will be the winners and which one will lose. And it's going to be a gamble all the way along. Yeah.
I can actually just say one point about regulation
Yeah.
in relation to the auto industry. Big reason why of course, there's the safety concern because these are two-ton death machines at very high kinetic energy. Of course, there's a lot of regulation around it, but there's another reason. The auto industry is very old compared to a lot of modern industries, and as Elon often pointed out, laws have often infinite life. So and laws just tend to accumulate, and a big part of why we have so much regulation in cars, and a lot of them don't even make any sense anymore, is because of the old age of the industry. And so when you look at the car industry, it's so overregulated, and we're going to have the same for new industry X or Z. I think that's not completely correct, because it's just a result of the age of the industry and bots. I'm actually not concerned that the bot industry, at least in the short term or medium term, will be loaded with as many regulations as the automobile industry is, because the automobile industry is just completely insane if you get into the detail.
Good point, AJ.
I don't know. I debate that one. Bots are dangerous. They've got cameras everywhere. They can be used for, anything you need to. They have access to every place. They could, anyways. So there'll probably be lots of regulations coming very soon.
I think the primary regulations around humanoid robots are just going to arise from workforce protection, the politics around protecting workforces from being disrupted by automated labor. Yeah, and there definitely will be a lot of protectionism, I think, that will arise by local and state and national governments kind of related to those concerns. Which is not to say that that's a good thing.
Yeah, offsetting that a little bit is the shortage of skilled workers that we already have. So, I know everybody's worried about everybody losing their job to AI and embodied AI, but the reality is we've got some pretty massive demographic challenges that aren't going away anytime soon. So we actually may welcome humanoid bots more than we want to reject them.
But on the flip side,
Okay.
politicians will use fear about that to kind of grab
Absolutely.
power.
Sure, they'll try to. Yep.
Yep.
Okay, well, thank you so much, AJ and CERN and Hans for joining. This was a lot of fun. I mean, if anything, this is just such an exciting field that we do need to have more of these conversations just to, think it through, right? Because I don't know if I'm right. You bring up some very good points, and I think we need to just keep thinking it through. But thank you so much, AJ, for coming in and sharing your thoughts. See you guys. Bye, everybody.
Thanks,
Thank you.
guys. Thanks for having me. It was fun. Bye-bye.
Bye-bye.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.